Welcome everybody. Let's see what we have for today. We're going to start our next chapter, Chapter 8. Let's look at the due dates for Chapter 8 in Blackboard, just so we got those set. Today we have the concept clips that are due at midnight tonight. So for those 5 points, try to complete that. The rest of it's due March 7th. And our exam is scheduled to be March 12th, which is a Tuesday. And that again is, you can take it here if you wish to, or you can take it at home if you wish to do that on that Tuesday. Which then leaves us for March 14th, which is the class period before spring break. We're off on that next week, right? So on March 14th is project or chapter 9. Is everybody going to be around March 14th? Because I get or will be picking partners for the project in chapter 9. And it's a rather large chapter because there's budgets in it. So that means I'm going to have a pretty big packet to give to you of the templates we're going to be using for Chapter 9 for the exercises. I can still email them to you, that's not a problem. I'm just saying if you can make it to that Thursday class on March 14th, that would be awesome. Any questions about the exam? If you do, you guys did really well. If you do have questions on them, let me know. We certainly can meet one-on-one and discuss those questions. Are you excited to be here? Carla, thanks for your effort. Thank you. Good deal. Let's get started then with Chapter 8. It begins on page 393. Navistar is the company profile in Chapter 8. And it's looking at how does a company make a short run decision? And what goes into that decision process? Obviously, we're the accountants. We've got to provide the cost information for the different choices that could be a possible solution to our problem. And the chapter does start out slow, I'm not going to deny it, in that it talks about the steps of the decision process. But once we get into the chapter a little bit, we'll actually start doing some number crunching, which will, again, help us make a good decision, really is basically what we're looking at. We're also going to be talking again in Chapter 8 about cost behavior. And from cost, guys, what are the two cost behaviors? How does a cost behave? What are the two choices? Starts with a V. The other one starts with the letter F. Variable, good. And fixed, yes, excellent. So again, we're coming back to this discussion and determining whether those variable or fixed costs are relevant or not. And relevant means that we should include it in our decision process. Irrelevant says don't include them. So we'll go through those definitions once we get through this first part here. The short run process or method of making a short run decision, and they talk about some of the types of short run. One of them is a special order if we have idle capacity. Another is make or buy. Make or buy it. In other words, should we make it in-house or should we buy it from another vendor? outside source. And that was Navistar's concern. They wanted to do a new type of axle for their trucks, and they were trying to find out whether they should do it internally or whether they should outsource the axle to a vendor. And they actually did decide to go with a vendor as their best low-cost alternative. And then another one is keep or drop. Many companies have more than one product in their sales, right? There's very few with just one type of product. So there should be always an analysis of our product line to see, is there one that we should maybe not keep doing, right? Or is there one that we should maybe expand and do more of? So that's also in our decision process in Chapter 8. And an offshoot of this keep or drop will be the process further decision. Should we sell at a certain point, or should we process that product further into another one? So I'll put this in green. Process product further. Will we get more money? Will we get more money if we do process it further? So all four of these decisions, special order, make or buy, keep or drop, process the product further, are found in Chapter 8. So the model is, they give us steps, and our first problem will be recognizing the 6 steps here. There are 6 of them. Recognize and define the problem, come up with alternatives is step 2, and eliminate that are clearly not feasible. Step 3, what are the costs and benefits for each alternative, right? Come up with their dollar amounts in step 4. Step 5 is qualitative, and the book talks a lot about the political choice that we make. Think of like Oshkosh Truck. They work for the U.S. Army, right? It'd be politically not acceptable to buy parts from Mexico or China, right? A lot of their stuff is done and made here. And environmental is another qualitative discussion that has to be involved in our decision. Is the waste that we're going to create by making this product, what cost does that have on our environment? So we're going to talk a little bit about sustainability and its effect on the environment. Also, we are looking at what happens when our product is no longer useful or the consumer decides to throw it away. What impact does that product have on our waste disposal system? Did you see that I was reading on MSN, speaking of waste, there used to be a Garfield phone. Did anybody see that? A container of Garfield phones fell off the ship in the 80s, and now these Garfield phones are showing up on the French shoreline. So if you want to Google it, Google Garfield phones washing on the shore of France. What is that, 40 years ago? 30 years ago? It's about 30, 35. And it's amazing. They look like brand new. So 30 years in salt water and it's still good. So that's what we're talking about, environmental. That's an issue, I think. It doesn't break down apparently. And then obviously make the right choice. Oh, a couple terms here. I talked with my cost class yesterday, and a lot of the points that were lost on their exam, which they did this week, was because they didn't understand some of the words. So I guess, going to make a point of making sure everyone knows what these words mean. When I see the word irrelevant, it's the opposite of relevant, right? Basically, it's not useful, right? So if it's an irrelevant item, we don't include in our decision. Right? Don't include in our decision. And we'll have more as we go along here, guys. Also look at these, how it's used. They're just some nice examples. This one's okay. Keep or drop. Starbucks, just some examples of these short-run decisions. How does Starbucks decide whether to go into a certain city? And then how do they decide where's the location that they go? There's a very exact process to determine where those Starbucks are located and who they're located next to, right? And the same is for other stores as well. So I'm just going to pass through those. I'm not going to go through step by step. This is, again, you can do this on your own. First step, recognize the problem. And I think what we're looking for is additional productive capacity and space for raw materials. So in other words, we're looking to expand our operation. How do we do that? What is the best choice for us? Do we build a new facility? Do we find a warehouse that is empty and we can just simply lease it from that person? Or do we even decide, let's not take the risk at all in building or renting, let's just outsource our additional workload. The company I worked for, that's all they did was the overflow. If a company ran out of time or space, the work came to us. Identify alternatives, and regardless of what alternative, with everything in accounting, we have to worry about risk. Risk about what is the cost or what could be the cost. We really can't avoid risk, but how can we minimize it? And so we really have to take the time to make the best choice that we can and find out what that cost is. Step 3, and I'm just going to throw this through here. I'm just going to quickly go through these. Here's where we identify the costs for each alternative that is feasible and find the irrelevant ones that we can eliminate, right? Do not become part of our decision process, the irrelevant costs. So you'll on the test give us an example what costs are relevant, and then you'd have to decide which ones would be. Or which costs are irrelevant, and you'd have to pick the irrelevant ones. Differential has the word already in it that's defined for us. It's the difference, right? What is the difference between the two alternatives on a cost basis? And like it says here again, we're only looking at the relevant ones. Look at only the relevant costs for our decision process. And then again, qualitatively, additional to political, product safety. Once in a while, we make stuff in China which doesn't have the environmental laws we do, and then some things come over here and they have lead in their paint or something to that effect. once in a while you still hear that. It was much more prevalent in the 80s, but not so much today. It's kind of a world environment where the world has decided there should be no lead in paint. But that's the qualitative part of it, and then make our good decision. So let's try this process of the steps. And looking at page 437, we'll just quickly go through these. Tell me which is first, which is second. I think it's on an A, B, C basis. Or 1, 2, 3. So we're looking at order to make a good decision. What is the order to make a good decision? Looking at the list, and for those at home, I still don't have my glasses. What do we do first? What do we do first? What number comes first? Brianna, awesome. That's what I would think. Perfect. Number 4 comes first. This is step 1, right? Number 4. What's next, guys? Number 5? Yep, find the alternative that is best. Good, Allison. Next. I think it's 2, right?
Yeah.
Michaela, what's next? Are you with? What do you think, Michaela? Maybe Michaela wasn't following along. Could be. Are you doing your concept clips, Michaela? I thought so. Good for you. What do you think? What's the next step? Oh, okay. I'm so impatient. You get more impatient as you go older. What we have so far is we're up to number 2. So we picked a number 2. We identified the costs and benefits. I think it's
6.
number 6. Do you agree? Okay. Awesome. Cool. We're down to 2 left. Olivia, what's next?
Number 3.
Number 3, which is assess the qualitative good. And then what's obviously left? Number 1, right? Which one has the most, right? The most benefit. Greatest overall benefit. So those are our steps. Just kind of known for the exam, what order they're in. Excellent. Not too tough. Relevant costs. Please know this definition. This is a multiple choice question right here. Currently I'm on page 399 of our book, page 399. How or what is a relevant cost? It has to be future related. That's number one. And they have to differ across alternatives. So in order to be a relevant cost, what we're trying to do is decide the two alternatives. Let's just say there's two. What is the relevant cost in alternative one as opposed to two? In order to be relevant, they have to be future-oriented and differ between the two alternatives. So that's the goal. Also know this definition, opportunity cost, also on page 399. And I always call this one the lost revenue. If I do this alternative, I have a opportunity cost by losing the revenue of the other. Accountants, we do not track opportunity cost. It is, in a lot of cases, unknown or not measurable. So we are still very historical oriented and not so much future oriented. So we do not record these, but we still need to be aware of them in some cases. I think another way I like to use this, if you go to school, lost wages or wages that you would have earned had you went to work instead is considered an opportunity cost. So lost wages is a revenue to you that you're going to lose by coming to school. That's an opportunity cost. You probably learned that in economics. All right. And this just talks about your spring break. You can sell your books for 25 bucks and you're off to spring break with the money. So that's the opportunity cost there. Sunk cost, another definition. This is on page 400 now. Sunk cost cannot be affected by future action. So a sunk cost, by its definition, is an example of an irrelevant cost. The most common example of an irrelevant cost is depreciation expense. You'll see this in our problems and assignment problems that this expense, depreciation expense, is a sunk cost. It is irrelevant. And think about how that depreciation expense is created. It's a purchase done years ago. You have no influence on that decision or that cost. It's not future oriented. Remember, to be relevant, it has to be a future cost. Depreciation expense by its nature is something that happened years ago. So that's why we call it irrelevant. And it's just human nature to think about it. They have some great examples of this in the book on sunk cost, because it's human nature to include sunk cost. The two examples that they give in the book is Toshiba I'm trying to remember this. Toshiba and Coke. Now, Toshiba was trying to do HD DVD. Sony was doing Blu-ray. Which one of these two do you see today? Toshiba was doing the HD DVD, high definition. But what do we see today? We don't see any HD DVDs. We only see today Blu-ray. So basically Sony won, right? But it talks about Toshiba spending millions, and even though they were losing and losing badly, losing a lot of money, they kept putting more money into the project because we have this huge investment. We got to make it work. It never did materialize. So the same thing is true with Coke. You were too young. There was something called New Coke. They changed the recipe. They decided that was a good idea to compete with Pepsi. Well, it was a disaster. They lost their shirt on it because, again, they changed all their operation with this new recipe, stuck millions and millions of dollars into it, and the consumer didn't like it. They liked the Coke the way it was. So they had to revert back eventually with that decision. But they kept going and going in the hopes that it would eventually turn the other way. Never did. So on page 400, take a look at that. I've seen many companies make a decision, well, we have this huge company, we got to keep it going, even though they're losing money year after year. So it's always problematic to convince owners to pull the plug, basically stop what you're doing. Okay. There's a trap here, guys. This is also, page 401. Don't assume is the trap. Remember, we have two behaviors, a variable behavior and a fixed behavior in our costs. The assumption is that always variable is relevant and always fixed are not. That is not true. We'll have some problems where that assumption is not always true. So we'll have to look at those once we get to our problems. But just be aware that we can't assume that all variable are relevant and fixed are irrelevant. It just talks about relevant decisions. Skip that. Here we go. So, for Chapter 8, on page 402, these are the 4 decisions or decision types that we will have to compute. So now we're getting into the computation phase for Chapter 8. We will start out today with the make or buy decision. We might get to keep or drop a product or segment. Remember, McDonald's is always looking at a different product maybe to introduce, and how do they come to that decision process. Number 3, special order. And we're going to look with special order at idle capacity. What does that mean in production? What does idle capacity mean? Anybody work in a manufacturing environment? Idle. What does idle mean?
You're not, it's just constant.
At standstill. Idle means you're not doing anything. So idle means I have capacity I'm not using, basically. So that's a huge problem for a lot of companies. They have equipment, machinery sitting there idle, not making stuff. So what do we do about that situation? Well, I could do something totally different and hopefully use up that excess capacity or idle capacity. And then finally, number 4 is to determine whether we should process a product further or not. Think of a barrel of oil, right? BP has to make a decision, well, do I make diesel fuel out of that oil? Do I make and process it further into gasoline? Or do I process it further and make some nice plastic out of that petroleum, right? So that is a huge, huge task to determine how much of each product do I make. And that's what decision 4 is about.
Does it matter the order? Because in the book, the 2 and 3 are
No, it doesn't matter. They're totally 4 independent types of decisions, so no, it does not matter the order here. And it says this is not, there's more decisions that a company makes other than these 4, obviously, when they look at their operation. So let's start with make or buy. Page 403. The example is on page 404, exercise 1 or example 1. Navistar is the company profile for this chapter, and they talk about this Navistar make or buy decision. And they did decide to buy their axles in this case. So I do have that discussion here regarding what did they consider in their process, or cost did they consider in their process, as well as ensuring that that product that they're getting from a vendor has the quality that they're used to, right? And that they make the delivery at the appropriate time. So those are those qualitative factors relevant in a decision process. Delivery is probably even more, well, I shouldn't say that. Quality is important, that's a given, but delivery is just as high on the qualitative decision process. So the example in number 1 on page 404 gives us total cost and unit cost. And we're getting back to that product cost. These are the 4 parts to a product cost. Remember that from the good old cost days? Direct material, direct labor, variable overhead, and fixed, right? And they came up with a unit cost of $8.20. So you're the accountant. We can make it for $8.20 in-house. A supplier comes in and says, hey, we can make that same part for you for $4.75. What's the cost differential? I spent a lot of time writing differential. What is the difference, guys? $3.25. No, $3.45. Can someone corroborate that? Please. It's our first computation today.
345.
345, right? So you're the manager. What would you say? What should you do? What would you do? Outside, right? I can save the company $3.45 a piece. If I make, right? If I make 100,000 pieces in a year, I can make $345,000, right? My bonus should be at least 10%, should it not? Wouldn't that be a nice $34,000 bonus? I could buy that hot tub now. Yes. That's what you are going to be doing if you're managing a company. That is a legitimate question. However, what else do we have to consider before we say we're going to give Olivia, she's the vendor, we're going to give her, we said didn't say Ophelia, her the business. What do we have to do first?
Don't you have to see like the quality?
Yeah. Quality, and what's the number 2 question?
Production or shipping?
Is she going to deliver on time?
Yeah.
Yeah, that kind of thing. Very good, Carla. Excellent. Yes. Shipping and delivery is also just as important as the quality. What's another concern as an accountant? I'm going a different route.
Price goes up.
No. Eric and Chris are making the parts. Eric and Chris are right here under direct labor. What do we do with them? Nice knowing you guys. And it's right before Christmas. Oh, that's not good. But it happens every day. GM is closing plants right now. Right? In Ohio and some of those other places, they're closing plants right now. So, that should be in the back of your mind before you decide to switch. All right? Who's in fixed overhead? What cost is in fixed overhead? An example.
Depreciation.
Yeah, depreciation. He said that was not relevant. So we need, guess what? We need to take that out before we make our decision. Because that's a sunk cost, is it not? Who else is in depreciation? Not depreciation. Who else is in fixed overhead? Supervisor. Yep. And that supervisor happens to be the owner's son. That ain't gonna fly, right? So, just some things to think about. Lots of politics involved with this decision, not just cost numbers. So you really got to be careful whose feet you're stepping on. So here's how they came up with the answer. So, 5 slides? Oh God, Gary, don't show me 5 slides, I'll go crazy. Here, what are the alternatives, make or buy? What are the costs of each alternative? So they came up with this nice little table. This table is on page 405. Here, it does show the relevant costs. Look at the list on the left. Which costs are relevant? What behavior type are we looking at? We only have 2 behavior types.
Okay, variable?
Variable. These are all variable. So if I make it, right, I'm going to have to buy material. Makes sense. If I buy it from a vendor, do I have to buy material? No. So that's a difference. That makes it relevant. Labor is the same way. If I make it, I'm going to have to pay Eric and Chris. If I don't make it in-house, I don't have to pay them. They're laid off, right? And then all the variable small and like costs, supplies, maintenance, material, repairs and maintenance, utilities are invariable. If I don't make it, or if I make it, they're there. If I don't, they're not. And then on the opposite side of things, if I do buy it, there's my cost on the other end. So, looking at the cost differential now, which is cheaper? I should be making it. Wait a minute. We just said we should be buying it. I'd be making lots of more money. But what cost is missing?
What are they gonna charge us for it?
Well, that was $4.75. That's where this number came up, the 47.5, right? We must be making 10,000 something. What cost is missing in our decision? What's an irrelevant cost? All the fixed costs are irrelevant. Yes, Carla? Very good. I forgot what we had for fixed.
44,000.
44? Irrelevant. The assumption is, remember, we said depreciation is there no matter what. Whether I make or buy it, depreciation is there. Since depreciation is under both decisions, oops, I better not put it there. Under both decisions, both alternatives, I should say, we don't include it. It's not, because the 44 would be under both columns, make or buy. We can't get rid of the expense because it's already done. It's a sunk cost. Guess what happens to supervisors in most cases? We said a supervisor was another example of a fixed cost, their salary. More than likely the company does what? Moves them to somewhere else. So even though they're not making anything any longer, their role has changed to another part of the company. That's why it's irrelevant. So whether I make or buy, that cost stays. What do you think? Does that make sense? Now, they changed the scenario. This is also on page 405. Of the 44 fixed cost, 10,000 can be avoided. So obviously the supervisor is not a relative. So we can get rid of that person if we do not make the product. So if we make it, that person's salary stays. If we buy it, that person is gone. Do you see the difference? What's the word here that the author uses? Avoidable. Watch for that word in your exercises and problems. If it's avoidable, fixed. Remember the rule of thumb is variable is always relevant, fixed is always irrelevant. This is the rule that's broken because the cost does change between the two alternatives. Is that okay? So now, if we can avoid this fixed overhead, what's our best decision now? To buy. Why is the buy the best decision? Its cost will be cheaper, right? The cost is less here, so the buy is the best decision to make in this case. Is $500 to save $500? Is that a good choice? Maybe so.
Depends on the quality.
Depends on the quality, it depends on the delivery, right? It might be less headache to manage this making part of things, right? You can just buy it from somebody, it's a lot easier in a lot of cases. So that's the job here with this first part of chapter 8 here, is to come up with those decisions. All right. There is a little snippet on HP, and they're concerned about electronic waste. Again, as the consumer, when we're done with this printer or copier, what does that do to our environment? So there is a cost associated, an environmental cost associated with our decisions, and that's something we should always think about too when we get rid of the product. Let's try example 38 to get us in this mindset, I guess you could call it. This is a make or buy decision, and Zion has some information at the top of page 438. They're looking at a component K2. The cost of that component to make it in-house is $26.75. They are thinking they can buy it from Bryce, right? For 25 bucks. So I'm going to put that here. Does everybody find this on your packet? Does everybody have it? I'm going to put right here the $25 buy. And that's all there is in that column. So alternatively, we can buy it for 25 bucks. In most cases, what's relevant? The material cost at 12. Per unit. The labor cost at 8 1/4. And the variable cost at $4.50. And you notice that we don't include the fixed. Here again, the assumption is that the fixed doesn't change whether I make it or buy it. So my depreciation, my salaries, right, my insurance, all those things stay the same. So they are not included. So if I add this up, I get 24.75.
Yeah.
So what's our best choice here? Make it. It's the lowest cost. What is the differential in cost? It's 25 cents. Differential in cost to make. So it's less than, right? So we would have these as, I'm doing it the way the book does. 12 positive, 825 positive, 450 positive, and the negative is the 25. And I'm just following the example in exercise 1 here of how they lay this out. Normally, guys, I don't even do that differential column other than for the net difference. I'm just going to look here on mine to make sure I'm in the right direction. Yes, that's how they do it. Okay. Question 1 then, just to wrap it up a little bit. What are the alternatives facing Zion? Well, number 1 is to make it. Number 2 is to buy it. Those are the 2 choices. Pretty simple. We've already done the listing of the relevant and costs for both alternatives. So that's done already through our process. And the second question of number 2 is, by how much will income increase or decrease if Zion purchases the component from Bryce. I don't know why you would do it, but if you did buy it from Bryce,
Decrease by 25 cents.
yes, it's going to decrease by 25 cents times 10,000 units, which would give you a decrease of operating income of $2,500 would come down. Now, obviously, we wouldn't do that decision, right? We wouldn't make that choice. Which alternative is better? You've already answered that. That would be to make it. All right, that's the process. And I'm going to put an assumption down on this, just so we get in the habit of addressing the fixed costs, because we just kind of just didn't list it. They're not avoidable. They are not avoidable. Fixed costs, in other words, are irrelevant in our decision. We don't include them if they're not avoidable. That means whether I take the make column or the buy column, that cost will stay. So this costs will remain, and sometimes the author will say this, the fixed cost will remain for this and this. Whether make or buy alternative is used. And that's the key here. Whether I make or buy, that cost will remain. That makes it not avoidable. That makes it irrelevant, because whether either choice, they're still there. So try again to get used to that terminology as we do these problems. Okay. Let's take our first break here, guys. Let's stop and pick up. Here we go. So take a minute. There's a little paragraph that talks about the fixed overhead. So we got a new item here for problem 39 on fixed overhead. What's that new information?
So would you include the 75 or would you take off 75%?
Yeah, good question, Carla. Do we include the 75 or do we take the 75 off? So we got $2. The author says 75% of the $2 is what? $1.50. So 75% of $2 is $1.50. But what does it say about the $1.50?
It would be eliminated if the component were no longer produced.
Yeah, it's eliminated. You're right, Michaela. Very good. Yes, it's avoidable. Very good. So if it can be eliminated or avoidable, it's relevant to our decision, and it's included on the make side of things. So back to our problem, we have 12, 8 1/4 on the make column. we have 450 for variable, and let's put in, I know it's kind of low here, avoidable fixed of $1.50 is part of the make choice. If we make it, we gotta have that fixed overhead. If we don't make it, I can get rid of it. The purchase stays the same at 25, which I'm going to probably push up here a little bit. Kind of put it here. That goes over to there. So now if we look at our cost differential between the two alternatives, we've got 12, 24, 25, 26 and a quarter versus 25, a cost differential in this case to make, which would be higher, or a positive $1.25 in this case. I'm not going to do that column stuff. So what's the best choice now? Buy it, right? We certainly, with a lower cost, the best choice here is to buy it a lot cheaper. $1.25, 10,000 pieces, you're looking at $12,500 in cost savings. So here again, sometimes this comes down to cents, whether we make it in-house. If we're making millions of these pieces, it could actually come down to cents differences, and you would certainly make a decision from there. So now it says if they bought the part from Bryce, how much will income increase or decrease? And if we bought it now, we would do what? It would increase income if we bought it from Bryce. The cost differential is $1.25. We're buying 10,000 pieces. Am I not doing something right? I could be. Thank you, Brianna. 12.5 is the increase. Exactly. I'm glad you're auditing me. It's cool. That's what accountants do. We've already said buy is the best alternative, and you will be asked that on the test. Is the buy or make the best alternative, right? And then it says, briefly explain how increasing or decreasing the 75% figure affects their decision to make or purchase the component. So, if we look at the original data back here, we only had a cost differential of 25 cents. We're looking at the $2. At what percentage do we get 25 cents? So this is a math question. I'm looking for a cost of an amount of 25 cents. That's the dollar amount. How do I get to the $1.75? What percent, what do I multiply the $2 by to get me 25 cents? 8%? I think it's more than 8. 12.5. I think Michaela's got it. 12.5%. So if I took 12.5% times $2, I should get a quarter. Is that correct? So how did Michaela get the 12.5 cents? What do we learn in accounting applications and procedures? We take the difference and divide by the original. 25 cents divided by 2 gives you 0.125, which is 12.5%. You will be asked on an income statement, right? If you're doing a horizontal analysis, you always take the difference, divide by the original. I'm not talking vertical when we divide by sales. I'm talking horizontal analysis. Okay? As accountants, we need to know that horizontal analysis. How much did cost change from year to year? That's the goal here. All right. What's our next question? So we have to be greater than 12.5% to answer this question. If it goes beyond that at that point, if 12.5% of our fixed costs are avoidable, we would certainly be buying the product. And question 3 is kind of funny. By how much would the per unit relevant cost have to decrease before Zion would be indifferent between making and purchasing the component? Well, it's at 2. We're indifferent at 25. So our fixed cost, our relevant fixed cost, would only have to go down I gotta read the question here. How much would the relevant fixed cost have to decrease Is it the $1.75 or is it the 25? Or is it the difference between $1.75 and $1.25? Yeah, that's what I'm thinking too, Liz. How much would the relevant fixed cost have to decrease? So the relevant fixed cost right now is at $1.75. Right? 75% of 2 was what? I'm getting confused. Was $1.50, right? So I'm at $1.50. So I'm at $1.50. We could go down $1.25 to get it's still not right. I'm having a mental block here. Yeah, my differential is $1.25. So all I'd have to do is go down $1.25, and then it's irrelevant. It's
That's the difference.
That's the
between
difference
two.
between the two at the top. So forget this, this is on the wrong track. I should be using the 150 and the 125. So to answer question 3, and it's very confusing, you won't have anything like that on the test. I believe, in my mind, they could decrease $1.25 and then it would be indifferent. Because that's what our difference is currently. That was kind of messy to end up with. I was so excited with that problem, it kind of went backwards. Okay, I think we're okay. Let's try another one here. 52, let's jump up to page 442. Get us at least one more shot at this. Because I didn't like how we ended that. Oh, somebody has another thought. Nope. Here, what do we have? Lassingham. Guess that's how you pronounce it. Take a few moments to read the paragraph for problem 52 on the bottom of page 442. I'm going to start my relevant items. They're currently looking to get part Q108. There's 35,000 of them. They have a cost per unit of $13 per unit. An outside supplier has offered to sell the part to them for $11. So I'm going to put that right on the bottom here. Purchase is 11. That's really all that there will ever be in that column is the purchase price. What's my first relevant cost? Direct materials. Very good. Thank you, Sandy. And it's at $6. I already gave the second one. Direct labor is relevant because they don't tell us any different. And then variable overhead, right, is also relevant at $1.50. So the big question here is, how do we handle the fixed? What part of the fixed is relevant? What does the paragraph say?
Then a part of it goes to the Q108, and then the rest of it is common fixed overhead.
Yeah. Well, some of it's direct expense and some of it's common, right? Liz says 77 $1,000 is salaries and equipment. That supposedly is a lease, so it's a rent that they can get rid of if they don't make it. That's true, but to work in my schedule and the 45.5, how'd you get 45.5, Liz? Yep. So you multiplied $3.50 times 35,000, and then you subtracted the 77. Yep, that makes sense. Okay, good job. Excellent. I'm going to do the same thing on my end. So here we go. Um, 350 times 35,000 units is equal to, I think, I forgot what Liz said, 122.5. But remember, these are per unit. The 122.5 is the total. I don't want the total, I don't want 350 here, right? What do I put here? $1.30. Awesome. How'd you get it, Liz? I don't want the common, do I? I want the direct. So I like your bottom number. I don't like your top number, Liz. What should we be using for the top number? The avoidable amount, right? That's what's the relevant number. So on the top number, guys, I want the 77,000. The bottom number will be 35. Yes, 220 is the number I'm looking for. 220 is the number. Brianna, do you agree? Okay, excellent. Thank you. So, I'm going to put this in green. I don't want the 350. I want the 220. And I'm going to put this to the right. How did I get the 220? It's the avoidable cost divided by the 35,000 units is how we got to the $2.20. Now, the author used a different terminology here. Direct expense. Direct expense. This is another term in chapter 8 versus common expense. We'll talk more about those two terms next week, Tuesday. But basically, the direct is directly tied to that product. And they also, fortunately, said that this part is the avoidable expense. So if I make it, I include it. If I bought it, the expense would be gone. That's what they mean by avoidable. That's why it's relevant. So now I'm adding the four amounts, 8, 950, 1150, 1170,
Yeah,
right? Which is best?
to buy it.
Buy it. because it's 70 cents cheaper, right? 70 cents cheaper if I bought it. So, it's very easy on the test to do what Liz did. She took the common part, which was 45.5, which is the 122.5 minus the 77, and she divided that by 35,000. Do you see how easily? And guess what?
How did she get that 45,000?
She took the 122.5,
Okay.
the total, and she subtracted the 77 direct to get the 45.5. Carla.
So we didn't need the 30.5 times the 35,000 at all?
We don't need, no,
No? Okay.
no, not at all. So the common stays. Whether I make it or buy it, the common cost or expense stays. So that's why it's not part of our decision here at all. So whether I make it or buy it, the 44.5 I'm going to have to spend. So it's not relevant. And the total's not included. All I'm concerned about are the relevant costs. Has to be this to be included. That's what's important to know here. Because on the test, the answer, the way that Liz did it, is going to be there. Guaranteed, because they know what students do. Is that clear? Clear as mud? Hashtag awesome. You love doing this? Well, you may not have to love it, but do you understand that that's my concern? Any other thoughts on this? Question 2 is kind of silly. The relevant cost of them making it is $11.70, so that's the max I would pay, right? I certainly wouldn't pay an outside supplier $12 if I could make it for $11.70. If they buy the part, how much will income increase or decrease? If we bought it, we certainly will increase our income 70 cents a piece, right? And I think we needed 35,000 pieces or units. So income will increase by
24.5.
Is that right, guys? 24.5? Okay. Thank you. So that's the answer to question number 3. All right. We'll save 53 for Tuesday. I want to get to something else. Special orders. This discussion begins, and it's really straightforward. Even more straightforward than make or buy. Begins on page 406 of our book. Here's an occasion again where a company has idle capacity in their operation. They want to use that up. We want to make sure our machines are running. So we're looking to sell to somebody that's special, that's not normally sold, or our products are not normally sold to them. Exercise or example 2 does this special order. It runs along the same line as make or buy. We look at our costs. Again, relevant costs are only considered in this decision. As to whether we accept the special order or reject the special order. So if we look at the answer to example 2, they want us to sell it to them for $9 a piece. If we add up our costs, which is $5, $6, $7.30 is our cost, it looks like we should sell it to them, right? I'm selling it to you for $9. My variable or relevant costs are $7.30. I'm going to make $1.70, or my profit will go up $34,000. So that's special order. So if we look at an example 40, let's take a look at problem 40 here. Cuts over 2 pages. So smooth. They make paperweights. You guys don't even, do you know what a paperweight is? So, if you, back in the old days we had a lot more paper, you put a weight in it so the wind wouldn't take it. Paperweight. They used to be cute little, start a collection, they're really cool. They're looking to purchase 15,000 of our paperweights for $7 a piece. Now on the surface, again, selling price is at $7. Our cost is at what in the table? The total cost.
The 830?
The 830. We would be laughing at them. I can't sell it for $7. My cost is $8.30. But we got to look a little deeper, right? So it says here they're geographically separated from their other customers. Existing sales will not be affected. That's nice. Smooth normally makes 82,000. So their production capacity is 82,000, and where are they now? What are they currently running at? Yeah, 65. This is important to know. How much is the order for? How much does the customer want us to sell to them? 15? That look right? Wouldn't it be a good idea to make sure before I say yes that we have the capacity to make the 15? And it looks like we do. We have the capacity to make 17 actually. So when you get to a special order problem, verify that you have the capacity to do it. All right. So, question 1, what are the alternatives?
Buy or sell?
Well, special order, they want us to use accept or reject. So the word changes slightly. So they have it listed. This is their template, saying gauges. The materials is relevant at 310. Labor 2 1/4 is relevant. And $1.15 is relevant. $6.50. Versus what? What are we selling a tune for?
7.
The 7. So, should we do it?
No.
They say we should. My cost is $6.50. I'm selling it for 7.
Oh, so we're getting a profit off.
We're getting a profit of how much?
50 cents.
50 cents. Now, it doesn't seem like a lot, but when your machine is sitting there just sitting anyway, and we're looking at how many units,
15.
what is our additional profit? $7,500. That makes sense? We're going to make $7,500 by accepting it. The problem doesn't mention fixed cost though, right? So when looking at fixed cost, the question, other problems will, right? So watch for the word avoidable. Right? Like we had on our last problem. Watch for the word avoidable. If a fixed cost is avoidable, we include it in our cost per unit, right? So today, that's what I need you to know. If it's an avoidable fixed cost, we include it in our cost. If it's non-avoidable, we don't, right? This could be a multiple choice question. Is an avoidable fixed cost relevant or irrelevant? If it's avoidable, it's relevant. We have to say it's relevant. If it's not avoidable, if it's a non-avoidable fixed cost, it's irrelevant. So be comfortable with that terminology. Be comfortable with that terminology. All right. Let's worry about 41 next week. We'll pick up on 41 next week. Now, the project problem. I'm not going to add any to my notes, but I want to just head out there. Because if you get a moment this weekend, because remember, this is all due a week from today, right? The 7th of March.
Yeah.
That's next week, Thursday, guys. So if you get a chance, look at the problem, 59. It's a keep or drop problem, which we'll touch on Tuesday. We'll talk about keep or drop on Tuesday. It will take some time to do. I'm not saying it's going to be a 15-minute, 20-minute deal. Because you are going to do 3 separate segmented income statements. 1, 2, 3. So it will take some effort to get through it. I don't want you to start the project on Wednesday. So I'm trying, or I will try to give you some time on Tuesday to start entering some information. So what I'd like you to do this weekend, please read the problem so that you're familiar with some of the things on it, so that you can possibly ask some questions about it come Tuesday. Now, what's shown on page 59 is a line called fixed cost. It's got an asterisk on it. So, what does that mean? And this is kind of what I want you to think about. So I'm going to make this note in case you put your stuff away. Fixed costs.
It says that it includes common fixed costs for 18,000 allocated to each product in proportion to its revenue.
We've got 3 segments, A, B, and headset, number 3. That $18,000 of common, and this is done by companies all the time. Common means it's not traced to a segment. What we are going to have to do is get that out of that fixed cost amount for that segment. I only want the direct. So the goal here
Separate.
is to get my segmented fixed cost, which is also known as direct fixed. So what's showing in the book now is both direct and common together. So for System A, $10,000 is both the direct and common together. Your first job, but I want you to think about it this weekend, is to get the common out of the $10,000. So what does the company do? Based on sales, as a percent of total sales, they take that percent, multiply it by the 18,000, give it to A, give it to B, give it to headset. That percentage. I want you to see if you can first come up with the percentage of sales. Once you have the percent, multiply it by the 18,000, which is our common, right? So I have total on the income statement at 10. I forgot my 1. I subtract the common, and what should I be left with?
The direct.
The direct. And guess what? That's my goal for Tuesday, is to come up with that direct cost as well. Carla,
Wait, so the 10,000 is only listed on here. So the common would be the 18,000 times the percent or whatever the sales are?
Yes.
That equals the direct?
You subtract that common part out of the total to get the direct. Yeah,
Okay.
you got it. That's exactly what I want you to do.
Okay.
Excellent. Because remember, to really say this segment is doing well, because what segment looks like it's doing very badly right now? B, right? They're losing money. But maybe they're losing money because they're getting most of the common stuff, right? So they have no control over corporate. That's what corporate common is. They have no control over those costs. Why would I penalize System B based on some allocated overhead? It makes managers of those divisions crazy. They hate that allocation. So we'll talk about that on Tuesday as well, because it's not fair in some cases. Okay, that's it. You're done. Yay, you made it. Good job, guys. Have a safe weekend. We will see you on Tuesday.